Afternoon, everybody. Morning for some, I guess. Thank you very much for attending today. So I'm going to talk about Aurelius Minerals, in our path to production with our define, refine, re-engineer strategy. Of course, the standard cautionary statement. Why invest in Aurelius Minerals? We are a Canadian-focused gold exploration company, projects in Nova Scotia, Ontario. Nova Scotia is a top-ranked mining jurisdiction. It's got excellent access and infrastructure. And in Ontario, the Abitibi Greenstone Belt's the largest greenstone belt in the world. Aurelius Gold is our 100% owned subsidiary in Nova Scotia. It's where you have modern infrastructure, access for year-round drilling exploration, and we are only the other. We are a fully permitted mine and mill, which is the only other asset in Nova Scotia as such after Atlantic Gold's Touquoy mine. Ontario provides optionality on the high-grade Abitibi Gold Project. We're only 30 kilometers from Hecla's Casa Berardi mine, and we're actually the second largest claim holder in the northern Abitibi Greenstone Belt. Aurelius East, the thesis again, it's one of only two permitted gold assets in Nova Scotia. We have a very significant gold resource. About 425,000 ounces combined between indicated and inferred. We've got extensive resource growth potential, excellent opportunity for conversion to reserves, and very significant exploration upside. All of our assets are located within an hour and a half drive of Halifax, so it's easy to get to with modern infrastructure. What's the history of I say Aurelius East project, but really the early part is all in Nova Scotia. Gold was first discovered in 1868, so a long history. There was production on and off in the general area until about 1935. There was renewed attention in the Aurelius East and West, and in fact, the Aurelius East mine itself was only discovered in the 80s. And so it sort of saw, fits and spurts of attention. The mid-90s, the gold price would fall away. There'd be a kicker in the equity markets. And then, really from about 2003, when the markets really started to turn, you saw some more focused attention. Most of the attention was focused here from a development perspective. It was really a prospect mining model. Let's get in there, let's mine quartz, let's put it through a mill and recover gold. There wasn't really a lot of underground there wasn't much diamond drilling done in total. In fact, just looking at this screen, there's probably less diamond drilling done here in total than we've done in our phase one program. We acquired the asset just a year ago, February 27th, 2020, and we changed the name to Aurelius Gold. And since then, we've commenced a 10,000 meter drilling program, which we are just about ready to complete on the east. And we've started to see some assay results from there. What is our strategy here? Our strategy is a path to production. The Aurelius East mine, it was last operated in 2018. There's significant infrastructure, historical investment, substantial room for expansion, and we're going to really use a three-phased approach to getting to that path to production, and that is define, refine, re-engineer. Our plans for phased drill programs will define resources along strike and at depth. We'll then refine those into resources. We'll refine those resources into reserves, and we're going to re-engineer extraction methodology and ensure that we maximize the opportunity. This is just a general picture of some of the infrastructure that's on site. This is in the upper left corner, we've got a picture of the mill from the outside. We've got a surface garage. We got some inside pictures of the mill, some float circuits, a gravity table, and then of course we have the entrance to the underground asset. About 2,500 meters of underground excavation there. The Aurelius East mine. This is one of my favorite photos. I took this myself in October. This is actually our second drill pad underground at the Aurelius East mine, where major drilling is conducting the work for us. We're currently drilling here. I think we're on hole 9 for the underground program. Might be hole 8. And I like this picture because it shows not only the underground itself, but also the high quality of housekeeping that's maintained here. And really what we've been able to do with this underground drill program is, and these are some of the highlights from that drilling, is to really define, three things. One, confirmation of the mineralization and the high-grade nature of that mineralization. Secondly, we've been able to identify broad mineralization over greater tenors. And we've even then identified a second gold population, which is a gold population that occurs in what was traditionally thought of as the barren sediments. And we see very interesting, very good grades, a meter of 20 grams, third of a meter of 58 grams, third of a meter of 113 grams, really solid, nice, high grade intersections, but really accompanied by some broader length mineralization, 5.5 meters to 7.5 grams. From a mining engineer's perspective, and I guess I should, I'm a mining engineer, not a geologist. I'm really, focused on extraction and how we get this out of the ground. But these are some of those thicknesses and widths that really get my mind around. How can we get this out, efficiently and profitably. Over on the west, where we drilled about 4,600 meters of drilling, we've gained a lot of broad, a lot of new information. We've seen some very broad mineral horizons there, 114 meters of a half gram per ton, along with, again, those high grade intersects, 2.5 meters of 13 grams, half a meter of 46 grams, about 60 meters from surface. We've also seen some fairly broad tenors of like 31 grams, 31 meters of 1.3 grams. So some really decent and broad mineralization. So we're in a very heavy system, and this is the west. So down here on the bottom portion of the asset, you'll see that the east and the west are only separated by about 1 kilometer. So this small red blob is about where the underground development's taken place at the East Mine. So you can see the opportunity to extend mineralization along this strike. That's 1.5 kilometers of strike there. And then you come down to the west, we have a small resource on here, about 53,000 ounces. And you can see that extends quite a length, even longer than what the east appears to be, right now. So we've got a really excellent opportunity to expand mineralization along, along strike. And interestingly enough, our holes 1 and 2 that we recently released from the Aurelius West Phase 1 program, they extended mineralization down to a depth of 500 meters, which is about 3 times the depth of our current resource, which is only down to about 150 meters and drilled on a very small footprint. So, I think it's a pretty, I think it's a really interesting opportunity and exciting here to really expand and grow these ounces. New insights. What else have we gained? I talked about the 2 distinct populations of gold. These assets had traditionally been viewed as quartz vein hosted systems where the gold would occur in nugget forms in the quartz. We've certainly identified much more mineralization in the system than just in the quartz. In fact, we identify a lot of mineralization along the contact between the sediments and the quartz. So you get it where it's sort of settled out from the liquid it would have been in before it cooled. And we've also identified very broad, fine-grained golds disseminated in the actual sediments. And you can imagine that it was like, that you had the bedding planes and the Earth's crusts came together, the Atlantic Ocean plate and the continental plate for North America. And as they pushed together, they bowed these planes up, and you broke up, made void. You had an explosion of enriched fluid. That enriched fluid filled the voids. But as it was going through those sedimentary bedding planes, gold was actually deposited. And that was never really understood until our neighbors, Atlantic Gold, identified that a few years ago. And they transformed that into a very profitable open pit operation. But that's something that we've confirmed here. So it's very substantial. Of course, I've got some interesting pictures of of the visible gold in the corners of the screen, very typical of what we see. But what's interesting here is that this is certainly our deepest hole to date, and this is, from what we understand, the deepest hole for gold in Nova Scotia. This is hole number 3, and you can see all the distinct pink bars. Those are actually mineral horizons. So we've gone from just looking at these saddles, these quartz saddles, to very multiple micro horizons, because they can all contain this nuggety gold. And then as we get down to depth, we saw a real change in the rock type. We saw metamorphosis. So a heat source had come and cooked and baked those rocks. And within that, we then started to find, half a meter is 16 grams a ton. So, what does that tell us? That makes us think that we're going towards the source of the fluid, the source of the gold that came up to populate the system above this. So that was a pretty exciting hole for us. Certainly an option, certainly something we're going to look at, drilling as part of a broader program. But initially, our focus is going to be on finding, near surface gold ounces. What's our path to production? We acquired the asset in 2020. We started our phase 1 drilling program at the end of August of 2020. The plan there was 6,000 meters of underground drilling, 4,000 meters of surface drilling at the Aurelius West, so 6,000 at the east. We subsequently raised a little bit of flow through in November, and so we've added some additional surface drilling at the east to really expand that strike length. So we're currently drilling there, and we've done about 1,200 meters of drilling there. So we're really excited. The issue that we've suffered, along with many others, has been a real delay in assay turnaround time. What would normally have been 6 to 8 week turnaround time for us, in some instances, is as much as 14 to 16 weeks. That's a very, very long time for people that are trying to plan drill holes based on technical information. So having said that, we've had a great run. We've seen some very significant mineralization at the east and the west. Very excited. Lots of confirmation of the high grade, and really allowing us to try to understand the geometry of the deposit, because I think that's one of the issues. The prior operators didn't focus enough on drilling, or weren't able to. They just didn't have the capital, and so elected to try to go underground, mine some gold, and pay their bills. And in doing so, they never quite understood the geometry. So they never quite were able to optimize mining methods, and as such, dilution kicked in, and they just didn't deliver as much gold to the mill as they were hoping to. Next step for us, focus on our phase 2 and phase 3 drill programs. Really, phase 2 would be the next round. Once we figured out where these assays come in and what they're telling us, then we like to do like another 20,000 meters or so of surface and underground drilling, later this spring, early in the summer, depending on treasury, of course. Really further define what we've been discovering, and then eventually, we'd like to roll that into phase 3 and probably roll another 30,000 meters of drilling there. I think what really our view has been, and where the value is in this company, the value in this company is that we're a permitted asset. Permits don't come cheap. Permits don't come in a short period of time. There's a lot of value associated with that tangible value associated with that permit. I'm not sure the market appreciates that yet. And this is one of the reasons why I speak to that, because you'll see here, this is from our neighbors, Atlantic Gold, which is a St. Barbara limited company. They did their quarterly update in December and established these slides in January, just recently. And you'll see that they start to see a decrease in their gold production forecast, in 2022, and then a significant one in 2023. About 50% of that production is subject to permitting, and then of course 24 is again subject to a new asset coming online. So I think where our sort of timeline, and it's really where we've sort of sat 18 to 24 months. Since we started this, so maybe next 12 to 18 months is really continue to drill, establish a measured indicated resource. Once we've got some confidence in that, re-engineer the mine plan and establish reserves. That then allows us to start the mine. Now I say start the mine because there's two options. One, we could then continue and put capital into the mill and look to produce ore and gold from that perspective. Alternatively, there may be an opportunity to supply, some ore to the Atlantic Gold operation in the short term. And that's certainly something, we're going to look at, but certainly provides us with an opportunity to do so. I'm sorry, I'm just skipping ahead here on my slides. You'll see here, in additional exploration, we've got two other significant assets that also have reasonable gold resources on them right now. The Tangier asset, that's got about almost 100,000 ounces on it currently, and then the Forest Hill has about 200,000 ounces of inferred and 73,000 ounces of indicated. So there's a pretty substantial mineral resource on both of these assets as well. We're in the process of actually getting these permitted. It's relatively friendly jurisdiction in Nova Scotia. So really it's the middle of permits, timing. But we think there's a real opportunity to grow substantial ounces here as well. And what we're able to do is really start focusing on near surface excavation opportunities and potentially be an alternate feed supply to our neighbors. Or alternatively, we can build our own milling operation for these other assets if we can't bring those to the Aurelius Aureus East mill, for instance. That's Nova Scotia. I'll briefly touch on what the Abitibi is, and we have two projects there: the Miquelon property and the Lipton property. Both of them are very close to the Ontario-Quebec boundary. The Miquelon asset is the one I'll show you next. That's about 30 kilometers from Casa Berardi's Hecla's Casa Berardi mine. People talk about closology, that's one thing, but we're on the same structure as the Casa Berardi. And when we displayed core from our hole 15 at the PDAC in 2019, the geological team at Casa Berardi was amazed at how similar the mineralization and the rock types were. So that was really of consequence to us. And we're just shy. We're only about 60 kilometers south of Kirkland Lakes Detour gold operation as well. Miquelon's a really attractive asset. This is another one where there was a historical resource. It was an unloved asset. They traditionally use this asset as a rental property for a qualifying property to list the company. They do an option and then they drop it. So it wouldn't actually see a lot of real exploration. But it had a 136,000 ounce resource at 2.34 grams per ton. But it was always viewed as a flat-lying lensoidal deposit at about 150, 160 meters of depth. We thought there was another way to look at this, so we did. We did a big database drive. We got all the government information we could, and we started to do some small drilling programs, and we started intersecting mineralization at the overburdened bedrock contact. Our best hit was 26 meters of 7 grams per ton. This is a very typical cross section of this deposit, and what we've identified is a steeply dipping, plunging mineralized system that's probably, true width 18 to 20 meters thick. We went in and drilled 5 sections, 50 meters apart. We drill it to kill it. And every one of those sections hit mineralization down to a depth of, and it's open at 400 meters. So we haven't found the bottom of this yet. And we're about 250 meters in strike length thus far, and we're open on both sides of that. So this is there's no cost to this right now. We're current on all of our exploration credits. We don't have to do any work here. But we can go back here, and we intend to go back here when the Treasury permits. Right now, our focus, we told the market we were going to raise the money in July. We raised $4.5 million. We were going to put that into the ground in Nova Scotia at the Aurelius property, determine whether it was, whether the effort was to be continued. Certainly has. We've confirmed the mineralization, but now, now we will come back to this at some point, but we do what we say we're going to do. We took the money, we've put it in the ground in Nova Scotia, and we've demonstrated that mineralization, and we've done good work there, and we delivered on what we said we were going to do. Management team, there's myself. I'm a mining engineer. I'm based I live in Toronto, but I'm from Sudbury, Ontario originally. I started working underground when I was 18 as a handheld miner. Paid my way to university in engineering at Laurentian by working as a contract miner. And I was lucky. I worked in Canada, Chile, Australia. 98, I lost my job at Inco. I went down back to Australia. I started playing rugby union. Decided that I'd go and have a year of fun in England, and I did a master's in finance while playing some rugby and having some fun. And I ended up getting a job at an investment bank on condition I played rugby for the investment bank. So I ended up I was in London for a couple of years, and then New York for a couple of years, and then I came back to Canada to start a brokerage firm for 5 years before going back into industry in 2008. So I've got a bit of a unique background. From mining, from the face right through to the boardroom, as both a lender and an advisor, and as also a borrower and as a company manager. My partners on this, Jeremy Neamy, various well-established geologists, Jermaine Coombs, Lorna McGilvery, Amandeep Singh, our VP Corp Dev, and our man on the ground in Nova Scotia is Billy Grace. He's a PNG. He's the general manager of Aurelius Gold, most recently manager of Mines Technical Services at Musselwhite for Newmont. Very well experienced and in the right set to be the oversight down on the ground to make sure that geology combines with the operational needs of the asset and really mitigating risk as we move forward. The board of directors, Randy Turner's our chairman, Mike Leskovic, the CFO of Nighthawk Gold and within the Northfield Capital Group, Garrett McDonald, another mining engineer, CEO of Maritime Gold, and then Gilles Arsenault, a very well-regarded geologist from Vancouver. So we've got a very, very good board of directors. Ownership management is aligned with shareholders, board, and management and insiders, including Sprott Resource Lending, who we acquired the asset from. We have over a third of the company. Friends and family have another 17%, and then institutional ownership is Northfield Capital at 5%, Goodman & Co. at 12.5%, and so we have a float of about 30% of our structure. And with that, I'm happy to open it up to questions. John?
All righty. And you can hear me and see me okay, Mark? Just verifying?
I certainly can.
Okay, perfect. So the number one question from Barry Allen, when is Mark cutting that COVID beard?
When we get the assays from this phase 1 program, Barry. I think it started off as a loose joke because I started growing it just when we started submitting the assays, and it's kind of become almost a bit of a daily reminder. I pull on it and I make a call. But it's not good, is it? Okay. My wife would agree with you.
Yeah. So if your wife is upset, then she can just blame the assay lab, right?
That's right.
Okay. Next question. What was the reason that the previous owner of the Nova Scotia assets sold them to Aurelius? One would assume they ran into some challenges. Do you have a plan to overcome those challenges? Yeah,
so they didn't sell it to us in the sense that so Sprott Resource Lending was a lender to the company that had these assets earlier called RCG, Resource Capital Gold. RCG, I think, like many others, felt that, we can see quartz underground. We can mine that, we can put it through the mill, and as we're mining, we can learn about the ore body, and we can, pay our bills as we go forward. It's almost a very Australian sort of model. 50, 100,000 ounces, it's all you need. Unfortunately, they try to do that on an inferred resource with just a PEA, and I think the reality is that they just didn't have enough capital to drill the ore body. It's a nuggety ore body. And you've got to be cognizant of that. There will be areas where you won't have mineralization where you're expecting it, and then you're going to have much more. So I think what we're doing differently is, first of all, we're applying modern exploration technology, and that starts in the data room. We go all the way back to the Nova Scotia government's database. We put all of that into a database. We have that where we can turn on every hole in the general area on or off. we've taken all the information we got from the prior operators, and that's in there as well. And we're really trying to understand the ore body. There's three things I care about as a mining engineer. Geology, I look at things, ore and waste. What are the rocks? That's very important that your geologist can work out the different gray, wacky sediments, etc. I care about the geology. Where's the ore and waste? But more importantly to me is what's the geometry? How does that ore body look and situate itself underground? Because as much as we want to say we can, throw a mining method on that ore body and do it, the ore body dictates to us how we're going to excavate it. And I think that's what's really important. And that's the third element: geology, geometry, and extraction, both physically from the mine and then into the mills and metallurgically. So those are the things I focus on. So what are we going to do differently? We're going to drill. We're going to understand this ore body. We're going to understand the geometry, and then we're going to modify the re-engineer the extraction methodologies to get that ore out of the ground.
Okay. Another question that's, you sort of touched on it in your answer there. What strategies are you considering to offset the known nugget effect in these types of deposits when eventually coming up with a resource update?
Yeah, good question. Again, that's where the ore body is going to dictate to us how these things are determined. So we do a few things. One, we very early on we got a QA/QC specialist to become involved with us. We were very fortunate actually when we acquired the assets in February and we finalized all the last little nuances in May. We actually acquired almost 2,700 meters of drill core that had been drilled on both the east and the west properties, but had never been sampled or assayed. So we immediately took that, sampled it, sent it to the labs, and we actually got some really good indications. We also saw some novel answers where we expected to see gold, we didn't, and where we didn't expect to see gold, we did. And that's really when we started to say, what's going on here? And that's how we identified these two distinct gold populations in our system. And I'll maybe put it in perspective. I mean, that's where Atlantic Gold's had so much success, because they took complete hole analysis, and that's what we did. We started from the collar right down to the bottom, and we measured every meter to try to refine our understanding. And that's where we started to see very broad mineralizations. I mean, Atlantic Gold's reserve is about 1.12 grams per ton. So they've managed to convert this into an open pit scenario where they run decent tonnage through that mill, and it's very profitable. I mean, I think their all-in sustaining capital cost is like sub $700. So they've done a really good job. So to answer your question, how are we going to get the resource model? We're working on that currently as we speak. We do QA/QC on assays. We do a variety of assay programs. We have a consultant that comes in and helps us with that. And so that's how we're going to overcome the nugget effect, by understanding the global mineralization.
Okay. Next question is from Stephen. He's asking, are you looking at ore sorting the narrow intervals?
Certainly an opportunity. In fact, I sit on the board of a company called Maritime Gold, where the CEO there has done a lot of work previously with ore sorting. He's done some work at Maritime and also at Dalradian's asset in Ireland, and the former Dalradian. And so yes, it's certainly something that we're aware of, and something that we'll look to pursue, because that's a heck of a way. For instance, if you wanted to increase the nominal capacity of our 300 ton per day mill, if you could sort waste, you could then just put ore throughput into the mill and nominally put more ore through by eliminating that waste fraction. So certainly something we're going to do. And whether it's visual or X-ray, depending on the nuances of the mineralogy, then we can look, and we can maybe even do both.
Okay. Ryan's asking, what's your average all-in drilling cost per meter? Have you had any challenges securing drill rigs, or perhaps more importantly, getting experienced drillers?
Well, we've been very fortunate, and I don't. I don't take any special credit for that, other than we have a very good relationship with a group that was originally based out of Timmins, and they were Norex Drilling, and they were actually acquired by Major, and we've maintained that relationship. And several of the managers migrated from Norex to Major Drilling, and we've managed to keep that relationship, and we provide a very safe work environment. We pay our bills in a timely manner, and we're very close for a lot of the Atlantic bubble-based drillers. So we're using that to our advantage right now. I don't get down to Atlantic, Nova Scotia as frequently as I'd like to. I am able to get down, but I don't. I've been about 3 times since obviously with COVID, but we do sort of keep that area protected. So we have not had a problem. All in drilling costs, we're probably 250, 260 a meter. It fluctuates a little bit. We do have the carrying costs of the underground infrastructure. So we have to put ventilation, compressed air, water. So we've got those sort of costs that are absorbed into our drilling costs. But I would argue that that's a very good price, considering the overhead that we have to maintain because of that, which includes a miner, an electrician, our mine rescue equipment, and the likes. So we need to have all of that in place in order to do that underground drilling. To put it in perspective, we are fairly efficient operators. When we were drilling in Northern Ontario, helicopter supported, our all-in drill costs there were sub $190 Canadian all in. So that was with helicopter supported exploration, about 185, I think it was. So we do stretch our dollars, and I think that's important for investors to note.
Okay, good answer. Question talking about Nova Scotia has obviously become the focus for Aurelius. Can we expect that it will remain the focus, or is there some plan for a change? I guess maybe talking about how you're going to distribute your time and capital towards, both Nova Scotia and the Miquelon project in Ontario.
It's a great question again. I think I sort of tapped on that a little bit because, listen, Aureus Gold is certainly, the focus of the attention right now. I think we have a lot of questions to answer. How are we going to do things differently? And I just continue to hammer away at doing things differently. We bring in, I bring in professionals. One thing I do, in my opinion, is I'm able to build very good teams. We are able to attract very good people because we resource them adequately. We don't leave them wanting for the resources to achieve, the goals that have been set out for them. We determine strategy, myself and Jeremy, Jermaine, and Lorna, we determine strategy, and then we allow the teams on the ground the tactical opportunity to achieve those goals. And so, we're focused. We have Billy on the ground in Nova Scotia. We're able, from a corporate perspective, to look at other opportunities to, wherever they may be. Miquelon, we have time left on it. We had a 3-year permit. I love Miquelon. I think Miquelon's got a couple million ounce potential easily. It just needs a good, solid 10,000 meter program. However, we are not going to, take value away from Nova Scotia now in order to throw capital at Miquelon. We've said to the market, we're going to take Aureus forward. We're going to move on a path to production. As we, move that forward and we get the opportunity from a treasury perspective, if the markets are favorable and they give us capital and we've got some excess, then we'll go and spend that on Miquelon. But we have time and we've got credits there, so we don't need to spend money immediately.
Okay. I mean, it's always it's a tough juggling act, right? In an industry where you're constantly burning capital when you have 2 assets that you like to juggle that, right? Question, many other companies also claim their properties are analogous to the Bendigo Goldfields and the Fosterville mine. What lines of evidence has Aurelius uncovered that give management confidence in that model?
Well, it's a great question. So part of where that question comes from is that Nova Scotia and the what they call the Maguma gold trend has always been modeled after the Bendigo goldfields of Victoria, Australia. And when we say model, the geological model. And this is because they have the chevron style mineralization, and this is what they would see. And these are the saddles we talked about. Now, when we drilled that 900-meter hole, that was a proof of concept opportunity. And I'll tell you why and what makes an analog. There are 5 broad categories for an analog. How do you compare deposits? One is the age of the deposit. So the age of the rocks, when did the event happen? 2, the rock types. 3, mineral types. What's the mineralization that's in there? 4, structures. So, you know, the chevrons, that plate pushing forward, the saddles, if you will. And then metamorphic grade. Has there been some metamorphosis? Has there been a change? And if that change to the original deposit is similar to another, that's how you get the analog concept. As many of those boxes you can tick get you closer to the analog. With the drilling of our deep hole 3, which went to 900 meters from surface, that's where we actually intercepted metamorphosed rocks, changed much different sort of rock type, lots of silicification to the gray wackies, and we had half a meter of 16 grams per ton. So we were not just an analog. That was our proof of concept. That was sort of like the missing link, if you will. So that's the opportunity. It costs money to drill at depth, and that's certainly something we'll look as we put together these broader phases of drilling. But certainly a lot of blue sky potential, at depth for us. Okay.
Mark, there's no new questions right now. I have a couple maybe that I can ask while we're waiting. I think you've said you've had the asset, the Nova Scotia, the mine and the mill, the permanent mine and mill for about a year. Yep. Are you able to disclose what kind of costs you're bearing to keep that in care and maintenance?
Well, we actually are able to utilize a good chunk of the carrying cost as part of our, because we're drilling underground, those costs are, baked into, or not baked up. Yeah. I mean, those are included in our drilling per meter cost. So if we were doing nothing and we were sitting back, it would probably cost, neighborhood of 70 to 80 grand a month. That changes when you start throwing more resources at it. Alternatively, you're able to absorb some of those costs into your flow through. So, that is, that sort of dictates. So it's probably in the neighborhood of, depending on how we're counting for anything and how much is going on there, we could probably get it down to as little as 50 to 60, as long as we're maintaining it dry. So there is, probably corporately, like any junior, you're probably talking about $1 million to $1.3 million for a year for all the SG&A, corporate and the asset, and then the campaign drilling budget costs are put on top of that. So, right now we sit on just shy of $2.5 million of working capital. We're spending that right now. We're just doing a little bit of surface drilling and finishing up the underground drilling at the east. And we probably have $1 million, close to $1.5 million of that's hard, and then the balance is flow through. So we're in a pretty good place right now. We're not driven to do anything drastically. We are waiting on those assays, and then my goal is to market and continue to let the broader investing public know what we're doing. We've started a YouTube channel, AureliusMinerals.com. We're on Twitter. We're trying the social media handles, and thankful for the opportunity to spend time with you, John.
Okay, a good question came in: is the mine fully dewatered, and is the mill permitted to use cyanide?
The mine is dewatered. We're actually underground at the 900 level, 920 level. That's where our drill pads were and are. So yes, they are dewatered. I don't believe the mine is permitted for cyanide. Most of it's gravity recovery, so there's not really a need. There was a float con that was made in the past, but I don't believe there was any association with cyanide that I've seen. So it's not permanent. As far as I know, it's not permanent because it's not needed.
Okay. So just so I'm clear, you have some ambitious drill programs planned for this year. but it sounds like the plan is get the assays back from the program you're currently doing, see what that has to show, and then go to market to raise capital to fund phase 2, say phase 3. Is that accurate?
Yeah, I think it's fair to say that we need to get that information back. I mean, at the end of the day, you need that not just qualification, but the quantification of what you've seen to determine where you should really be directing these treasury resources. They're scarce. I mean, let's be honest. This gold market's been crazy. I mean, you're up and down $100 in a week. In the underlying commodity, it's been tough work on the juniors. And I hammer away. We don't need to raise. We can take a break. We've got the capital to do so, and market and get the story, because there's a lot of value that's not recognized in this company. It's a permitted asset, gold resources, and significant exploration upside. And I'm going to continue to get that message out.
Okay. You mentioned in your presentation trying to connect the east and west zone. What sort of budget for meters or capital or human capital, whatever it may be, have you allocated for this year to try and see if you could connect those two zones?
So I maybe I misspoke, or maybe I was misunderstood. They are the same deposit. It's just shifted a kilometer via what they call the Hurricane Cove fault. I must admit I was struggling a little bit with the platform to see where I had an overlap of the slide. So I apologize if I misspoke. No, that they are. The east and the west are, as far as we're concerned, the same deposit. There's been a shift. We believe that the west has actually been uplifted. So the saddles that we're seeing at the west are actually, the deeper portion of the east, which is really of interest to us because it shows us the mineralization is still of consequence down below. We're not sure, is it 400 meters, 600? We're obviously investigating that with our drilling. But yeah, the two deposits are the same. We're quite convinced they're the same structure. There are parallel structures to us. I should actually highlight that we're not limited, along strike and at depth. We actually have, and I think I had it in my slide, just in the plan view right here. You can see there were actually parallel structures to the Aurelius West, where I'm running the cursor.
We actually can't see your cursor.
Oh, you can't. There's actually another structure, another ridge as we call it, running parallel to us. And we think we've seen one of those over on the east as well. We've got to do more prospecting, but we did that using government LiDAR. So yeah, we think there's not just the opportunity against strike and at depth, but we actually think there's lateral opportunity too. Okay.
And, I noticed in your existing resource that you have on the project, a lot of the meters are in the inferred category. So the meters that you would apply to sort of upgrade that to have higher confidence, that would come probably later in the year then, after you've done a little more exploratory work to define, building out along strike and at depth. Is that, fair? Or?
Yeah, I think so. How this works is you basically, what the geologists and, you obviously with your consultants, we have the QP, the qualifying people, we have the 43101, the national instruments and independent consultants. So we start early. So as I said, we brought a QA/QC person in as soon as we found that historical core. Before we even started our own drilling, we brought in a QA/QC consultant because we identified potential risks. And not just about risk mitigation. That's how I like to operate. Let's identify the issues up front and let's start ticking those boxes so that as we get forward and closer to engineering studies and the model construction, we've identified these risks. The last thing you want is for someone to say, "Oh, you should have done this." So I like to beat stuff up and say, what are the risks? What should we be doing differently? So we bring in those consultants. They're working with us on a concurrent manner. And as we sort of see how this mineralization occurs on a hole by hole basis, we're doing a lot of work with some academics actually in the area and actually based out of Laurentian University who have identified very, very significant occurrences and repetition within the stratigraphy. So stratigraphy is when the rock, that's the sequencing of rocks. So, sequence 1, sequence 2, sequence 3. And they're saying that is very, very detailed in the message and the information it can provide. A lot of it's detective work. So again, we're applying that into when we're logging it. We're going to very fine details so that we can start to see any repetition, any opportunity to, for predictability of mineralization, and really try to counterbalance the nugget effect and understanding that finely distributed gold. And we say fine, it's actually not finely distributed. It's fine gold that's distributed. Yeah. And so sort of get like a very general bulk model, and then, break it down. So to answer your question, yes, initially we want to, when you're doing discovery, you're only ever aiming for discovery and then bringing it into that inferred category. But based on all of that statistical information we're getting, that'll determine, what sort of tightness or the distance between drill holes we'll need to upgrade to measured and indicated categories. So indicated might be 25 meters, whereas mineralized might be 12.5 or 10 or 15 or 7, whatever that number is. And so we utilize all this drilling to dictate how tightly our infill drilling has to be to convert to M&I. And as I said very early, the geology is dictated. The ore body dictates itself to you. So initially, we need to grow those resources. Let's get those resources up. Then we'll convert them into M&I, and then that'll throw into. I expect reserves when we look at at mining methodologies.
Okay. I see no other questions. I'm going to ask maybe one last quick one. Your big key shareholders, I know you noted a few institutional players. Do they continue to be supportive? Do you hear good things from them? And do you think that you could count on them, when it comes time to raise more capital, say this year, to participate in those raises?
You can never speak on behalf of them, but I think if you ask them, they would say yes. I mean, we've done exactly what we said we were going to do. We have, we've taken the dollars, we've spent them, we're spending them efficiently, and we're generating, good results. And, I have a relationship with Jonathan Goodman and with, Rob Cudney, Jim Grostanis at Sprott Resource Lending. I speak to them, regularly. In fact, Mike Leskovic from Northfield Capital is on our board as well. And so, yeah, we've done what we've said we were going to do. Sprott Resource Lending appointed Jill Arsenault. So we've got representation on our board from from significant shareholders. And, it's a business we're in and talking to people all the time. So I'm very confident and comfortable with with those shareholders. I really, wish, we could just broaden our, the retail appeal and really try to get that message out there.
Okay. Well, hopefully this, this presentation helps a little bit on that end of things anyway. So Mark, thank you again. I appreciate you joining us. Interesting story. I'll certainly be keeping tabs on it. For everybody else that's watched, again, thank you for your participation, for your questions. Again, as always, there will be a short survey once this webinar ends shortly. We ask that you fill that out if you can. And if you would like Mark to contact you for a follow-up discussion, you simply answer yes to the question, would you like management to contact you? We will pass that information on to Mark, and, he'll get back to you. And he's also left his contact information up, I believe, at the end of the slide here as well. You can reach out independently too. So somewhere around here. There we go.
Yeah.
So,
or you can go to our website, aureliusminerals.com. If you go to the lower right corner, you can click on Ask Management for a meeting, and we can actually set up a time. Like I said, we have some YouTube channel and we're on Twitter. So look forward to, answering any questions you may have. Before we leave, I just want to thank John for putting this on and the opportunity. We're very happy to do this. And I will remind him, when this COVID thing is over and the OHL is playing again, the Sudbury will destroy the Sioux Greyhounds.
There you go. All right. Go Wolves, go. Okay.